All right.
Okay. Another thing I would ask you is when I turn on computer,
We're going to start here with the very, very first working paper.
and I've pressed something.
This is getting into the meat of the actual audit, okay? The very first test you're going to do is the materiality test. This test gives you an idea of how much of a spread of discrepancy you can have or be allotted to, not say overlook, but be within a certain range as to, okay, if I'm doing $1 million church and I'm doing a reconciliation and I'm only off by $10, you know, is it worth spending all day looking for $10? In my mind, yes. In others, no. Okay? Now, I may not spend all day looking for it right at that point, but I will look for it and find it. Okay? But the materiality test will give you that particular idea. So just saying if your current assets is $50,000, okay? At that point you have, it automatically has a formula already embedded into the spreadsheet for you to give you a particular amount. And that's just the current year. And say this prior year was 50,000 as well, and the second year was at a significant loss in members. Say the local funds was 40,000. Okay. At this point, you're going to look at which is larger, A1 or B1. So A1 is the larger of the two, so you would put the 100,000 down here. Now there's no formula for this just yet. Got to figure that out. I'm going to talk with Roy about that. But once you get that, you'll only have one number there. I'm not sure why 2 is showing up, but we'll fix that. Right now, your materiality would be more so $2,000 as far as the materiality amount. I saw a hand, Sonia.
What are you referring to, sir, when you say current year? What current year are you referring to?
The year that you're currently auditing. So you may be in 2015, but you're auditing the 2014 documents.
All right, so where am I going to get their current assets from?
It should be on their documents.
Which
on their
document?
financial reports. It can be on the financial summary, the financial statement, depending on what accounting software you're using, if it's on the ledger book.
Okay, I'm at a church that they don't keep up with, they don't produce financial statements.
You can, at that point, pull all of their bank statements.
And generate that number for
and generate
myself.
that number for that.
Thank you, sir.
Emmanuel?
Yeah, I just want to say something.
I think that the base, in this one they use current assets. You don't necessarily have to use current assets. That is why if you go through with the program, the checklist is going to be very important, because if the risk is higher, at times that you may look at expenses to determine which amount is material, or at times that you may look at revenue. So it will depend on the situation. So I think this form will be flexible, so they'll be able to do the adjustment and see which one do you think, based on the the walkthroughs and the things that we did and I've seen in the client, which base may be more appropriate, to determine which amount is material.
Thank you.
All right, so does everybody get that part of it? All right, so we're going to move on to the next worksheet of the actual audit, and we come to everybody's favorite, bank rec. Okay? In the spreadsheet itself, there are formulas that help assist you with this particular process. Of course, you have your bank balance, and you have your ledger balance. Okay? As you can see, it automatically tells you your difference. So there's no reason for you to try to figure out Okay, how much am I actually off? Okay? On the very, very next form, which is Form J for outstanding checks, is attached to that counter. You have your outstanding checklist. Your outstanding checklist is actually connected to the main part of your bank rec. So just saying if you have check numbers that are still outstanding, I'm just saying this check here is void. But you have a conference remittance check that's still outstanding for $5,000. Okay? It's automatically adding up here at the bottom as well for you, totaling everything, so you're able to see. So even if I have an amount on this side, it's adding into those totals, okay? Now sometimes your check numbers may extend past this particular point. Just adjust. If you should be pretty good in Excel, hopefully. You can just adjust those numbers, cut and paste and put them back into this section before you actually put the dollar amounts, okay? So at this point, once you put that outstanding check amount rolls in over here, okay? And the reason why we have a difference is there's another little number down here that's filling in for auditor adjustment. So we're gonna change that to 0. So now that changes back to a 0 difference, and that amount turns to green. This box here turns green once it's in balance. Now it's very, very rare this box stays red, even though you have a 0 difference. There's occasions that I've had my bank rec done and I know it's in balance, but the box is still red. So, software is made by man. We are not perfect. But this spreadsheet would help you tremendously as to when you're doing your rec, how much you're off, where you're off at, and things like that. You're able to capture your deposits and transits, anything that's not posted, and if you have an auditor's adjustment, you can just enter it there, okay? Any questions so far? And one thing, the key thing that I missed, I apologize for that, is filling in this information. Make sure you put the bank's name, address, city, account number. Do not erase the word account number. Click into the box and put the number, okay? Because you want to keep those headings and to know what it actually is. You don't want to just be looking at something and be like, okay, what does this number means? Okay? And sometimes on your bank statements, you may not know the actual address because Bank of America, or let me use SunTrust. SunTrust may be Orlando, Florida. That's not really the address of the bank. That's the main address of the main office for that region, but not that local bank. But you may have a local bank, just say Union First or something like that. That may be a local bank. So their local address will be on that bank statement, so you could use that address. So at some point you may have to ask the treasurer, okay, where's your main branch located? What is the address of the main branch? So you can have it for your reconciliation. Timothy.
I almost feel silly making a statement about the address. I normally put the address for any correspondent. So you would say that bank example for Florida, if something occurred and we needed to reach out, I know that they have a local branch, but sometimes churches use multiple branches. But I don't know, I've just been suggesting using the whatever the corporate address is for any questions or inquiries. Would you, so my question to
I wouldn't necessarily have an issue with that particular part, but the treasurer should know where their account was open.
Okay, all right,
They may be using multiple branches, but where did you open this account?
okay,
Even if the account was open 20 years ago, just starting as treasurer, there still should be documentation as to where that account was open.
okay.
And the reason why I know that's important, I literally just got asked that security question. Where was our bank account open? And I was like, hold on, let me go on my old boss to see what that was. But it is important, like Koki was saying, for you to know where you started your account, where it was open.
And it's good to, as well, and come to you, Emmanuel, to try to affiliate with the bank where you open that account versus going to multiple branches. That way they get to know you and who you are and how you operate, how you do your deposits, how you do your withdrawals and things like that. So if your treasurers are going to multiple banks, I would just say make a side note, not necessarily a recommendation in your report, but a side note to kind of encourage them to say, you know, you may want to try to use, you know, your main branch a little bit more. Now, there are security measures that you may want to take as a church treasurer. If you're carrying a lot of money, going to different branches, so people, if somebody is following you, you know, they may not know what bank you're going to that particular week. So that is a security measure, but they still need to make sure they show their face per se at the main branch sometimes.
Very quick. So I hope that if the client does the bank reconciliation, you are not going to reconcile the accounts again.
Yes, I am.
Yes.
Because if the client did the reconciliation and you tested the reconciliation and the reconciliation is correct, what is the need of redoing another reconciliation?
Oh, I didn't hear the part about you saying you tested.
Yeah, because most of the clients that we have, or they use Duo, and their Duo has a reconciliation feature in there that you'll be able to reconcile the accounts. So if that accounts have been reconciled, you have the bank statements, and the bank statements, you tie everything is fine. Reconciling again will be like working harder, you know. And another aspect on that is that on the outstanding checklist, I think that there should be a column there for date that the accounts have been outstanding. Because we have a law called sheet laws. Like if the account has been outstanding longer than a year, you are required to contact the person. And if you have not been able to get to the person, then you are required to send the money to the state. So if you'll be able to have a column in there to show how many years or that account has been outstanding, so they'll be able to comply with the state laws also.
You mentioned why would I do a reconciliation? Again, I would say I just don't. I have to go deeper. I will say this. I've seen where the reconciliations have been adjusted, and then at the end period, it comes out because they've already added back all the other stuff. So with respect to Jewel, I normally go and look at the Jewel transactions. I just sort the Jewel transactions by check number, because it's only 2 reports that they can have activity on, the deposits report or the checks written report. And then the negative numbers are assigned to anything manual. I just look at that list to see what they did, to see where they added back things and so like that. So that's how I test mine. I don't trust the bank recs all the time.
One thing that I do, and I agree with him because I don't necessarily trust the bank recs all the time. The very first thing that I do is I look at that bank rec from Jewel. Whatever that reconciled balance is should match what's on the financial summary. If those numbers don't match, I'm doing a bank rec.
Exactly. Right. Yeah.
Even though their bank rec is reconciled in Jewel.
Yeah. I mean, I think, let me say this quick. Sorry.
Sorry. And I think that the reason why we are doing the bank rec is that we are testing the cash balance, whether the cash balance is correct. I think that's why we're doing it. Okay. So if the client has a Jewel and I'm able to test the cash balance and the cash balance is correct, then doing another reconciliation doesn't serve any other purpose. Because we have one goal, that is testing the balance, the accuracy of the balance. So if the reconciled balance doesn't tie to the financial statement, then the financial statement or the reconciliation is not reconciled. Does that make sense? Then at that point, doing this will achieve the goal of testing the accuracy of it. So that's what I'm saying, that if you test the reconciliation and the reconciliation it's fine because you're going to test the beginning balance and the cash balance and all of that. So if it reconciles, then you may not necessarily have to do this. That's what I think.
I understand what you're saying, but for audit purposes and paper trail, you have to do it. Because you need to be able to prove, outside of saying I reviewed and it matched and stuff like that, you have to be able to prove that you've done the reconciliation and it does match.
Well, remember, what you're doing in the review in an audit is not necessarily to do the work of the treasurer. So many times, many places where we go, we have to do it. But if in testing, you can get the same result, then there'll be no reason to do it. If there's a way to test and to verify that their numbers are okay, then do it. Going through the process, you just create more work for yourself. You are testing to see if those numbers are okay. And there are times, you're right, there are times, I mean, number one, if your reconciliation doesn't tie with your cash, okay, that's a big sign, you know. If it reconciles, you can test, you know, you can look at the deposits in transit or the outstanding checks that you have. If those numbers look okay, you forge on, you know. But you have the flexibility. You feel if you're not comfortable and you feel you have to proceed, no one's going to stop you from doing that. So, well, I like to do as much work as I can in as little time possible as I can. Right. So, you know.
And I think you were asking about how, for audit trail purposes. Let me answer this one.
This is GCAS here.
Right.
Let's say I don't do this, okay? I don't do this, but I tested the reconciliation and it's fine. And it was asking, what is the audit trail? You need to put a statement in there, you know, saying that you tested this bank reconciliation, you know, this bank account on this date, it was reconciled, and blah, 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 everything, they match to the ledger and everything. So that just in case somebody wants to do the same work that you did, the person should come to the same conclusion that you came up to. You know, so once you document what you did, it will serve the same purpose as this. But if you test it and you don't document, then the point is that you didn't do it.
Well, true.
Yeah.
So documentation is fine.
Yeah, so this is, you know, your paper trail, but you can put on that.
Okay.
All right, any other questions on the bank rec? Okay, now if they have multiple accounts, you would just simply copy these pages, okay? You can just simply right-click, click on Move or Copy, go down to Form J. Make sure you click this little box that says Create Copy, and click OK. And at that point, you can just drag and drop it back behind that main account, okay? And you want to remember that this number here for outstanding checks is still connected to this document. So you would need to clear that out, okay? And if you have any questions when you're working on these paperworks, feel free to contact any of us that worked on it, myself, Candace, Timothy, or Emmanuel, okay? All right, let's move on.
Before we leave, let's see if we can have Vanessa to generate an email list and a phone list so that you all will have each other's contact information. So in the future, if you get stuck anywhere, you know who to contact and who to speak with. So, okay?
So if anybody has a notepad, if you could pull a piece of paper out for me and get that passed around, that'd be great. All right, let's move on here to Form K. Form K is a form that is entitled Auditor's Adjustments. This captures any adjustments that you do, okay? So at this point, you are.
And the form number is the same because I'm looking up here, it says O and...
I am sorry we did just correct those forms a few minutes ago,
Okay.
so ignore the title of the form on the actual paper,
Okay.
but they still should be in the same order
Okay.
as we're going.
So you're gonna send out the, you're gonna send out the updated.
So we'll send out the updated
Okay.
document as well with the correct form names. But with the auditor's adjustments, you will go by whatever department that you're adjusting. Most of the accounts that end up getting an adjustment is either combined budget or church expense. You may have an adjustment in Pathfinders or community service or something like that every now and then. But most of them end up falling under church expense for the most part. So here you would put the department or ministry or the account name. And you will pick the beginning balance of church expense before you make your adjustment, okay? So if you're auditing 2014 as of December 31, the ending balance for church expense is $5,000. That's your beginning balance prior to your adjustment, okay? Your adjustment is to reduce church expense by $500. Simply because increase by 500. Simply because there was a check that needed to be voided that wasn't voided. So at that point, once you void that check, it's going to increase your church expense by $500 for that year end. Everybody follows me?
Yeah.
Okay. And so forth for any other accounts, you would do the exact same thing. If you need to reduce, you would just use a negative number.
Would it make sense to have an additional column to explain what you're doing?
As far as adding and deducting?
Right, oh, it's not on?
That makes sense.
Why you're, so that the person who comes after you knows why did you adjust that department's description, so, right.
Well, this would actually be captured on the bank rec as well. So that's why it's important to do the bank rec.
Okay, all right.
So on your bank rec, on the front page here, I would say to void check number 200.
So you have the description on your bank rec, you say?
Correct. So I can put on here church expense, and we can probably put a column there for, for what you just stated as well, to say the void check number.
And the words beginning balance is not gonna throw anybody off, because that's not your beginning balance. I mean, that's your balance before you made your adjustment, and that will be a number at the end of the year.
Correct.
That's their adjustment prior to
Prior to your adjustment.
the auditor's adjustment.
Correct.
So just make sure that whatever language we're using there wouldn't throw people off.
So we can probably change this to maybe say year-end balance.
Yeah.
Or adjusted year-end balance.
So Candace, if you don't mind making this for. Thank you.
Luis has a question.
Yes, Louis.
Well, my question is just, sometimes with some churches, if you have 3-4 pages of adjustments, so then
This is where you
just
can,
copy and paste from bank reconciliation, or,
This is where you have one big adjustment.
okay.
I wouldn't necessarily say list all 30, 40, 50 adjustments in this section here per se.
Combine them.
Because like I said, your bank rec would actually spell out everything. And in that section that we'll add, you can just say, see bank rec for explanation of all adjustments for this account.
And that's because our final product is the financial statements where it'll just say cash.
Correct. Because if you list everything here, you're gonna keep redoing the balances over and over and over and over and over. And it's just, it really doesn't make sense to do that.
It makes sense to the church because they're seeing the balances. So they don't care about the financial statement, really. When they go to make their decisions and vote on everything, they want to see what's in each department. And they want to, so if it makes
What I'm saying as far as like, if you have 30 adjustments to church expense,
right.
there's no need, I don't see a need to list church expense 30 times.
Oh, okay. Just the church expense. Okay,
Right.
I get it.
I mean, that's just an example.
Okay, all right.
Good question.
Regarding the adjustment, is it okay if you have two spreadsheets, one for the adjustment that are material and one for the adjustment that are not material? Because we have materiality. If the amount is not material, then the client does not necessarily have to correct it. You know, say I did the bank reconciliation and I'm up by $20, for example, and it's not material. Why should I bother to, go in here and fill out this form? Because it's not material. So is there a way, that if you want to put another column or another tab or whatever for material adjustments to make?
No, I guess the only problem is for the local church versus when you're doing a cash basis only financial report, the church likes to know to the penny what's going on. So even though it may not be material, they'll still like to have the correct number, even though it's not material. I mean, materiality would step in terms of if you were reporting to the board significant items that you feel needs to be disclosed.
Yeah.
But when it comes to the bank rec, you want to make sure it's down to the penny as much as possible. But still, for materiality, that would be when it comes to disclosures and those your findings, because sometimes, if it's a significant amount, then you have to put it in your report that, I realized that the church did X, Y, and Z. But if it falls below the materiality threshold from a reporting standpoint, then no. But for your bank rec, you may want to make sure that because the church wants to know exactly what the bottom line is. So that's just I've not done one of these in a long time, but that's just my historical perspective.
You'll have an opportunity before.
Okay.
Any other questions on the auditor adjustment? This is just to capture your adjustments, that's it. Any other questions? Okay. Now we're going to move on to Form L, which is the very next page. Just flip that over. You'll see a maroon reddish type pinkish color page there. On this particular form, you want to make sure you put your entity's information, church name, address, city, state, the date the review is taking place, the review period, as well as your initials as to who is doing it. So if there's more than one auditor on that audit, put your initials there. Even if you're the only one, put your initials. On this form, there are formulas in here, like I said. Just saying the first check number is $1,500. And the last check is $2,000. At this point, you're going to test 25 checks. Okay? Over here, you can list your check numbers. 1,500, 1,501, and just drag it down till it says 2,000. It usually goes faster than this. I think it's thinking, are we going to change the check number to 1530 just to make it go quicker? So now you're going to check 6 checks. And you can say 7 if you want to round that number up. Now you want to make sure these check numbers stay highlighted. In Excel, you may have to download this part of the add-on if you don't already have it. You will go under data, and it's not even on here. So I get to show you how to do it. So we will go to File, Options, Add-ins, and you want to put in your analysis path. So you'll click down here. So that is, go to that. And you put check marks here on your analysis packs, and you'll just click OK. Okay? You'll notice that this popped up, data analysis. Okay? So you would now click on data analysis, and you will go down to sampling. Now I may have to do this again, but that's okay. So your input range is going to be your input right here that's highlighted from 1500 to 1530, okay? Your sampling is going to be 6 checks that you're going to sample. So you're going to type 6 into that little section. And then you're going to put your output range. Your output range is going to be in these columns here, okay? And as you go down, you'll notice it's saying 2R, 3R, so it's counting the check numbers for you a little bit. 4R, 5R, 6R. So that's 6 numbers that I have. Oh, I changed my stuff. There's one thing you have to watch out for as well. To make sure you actually click into that box to not erase your previous data. So our output range, and make sure to click there. And once you have that in that box, just click OK. And it's going to populate 6 numbers for you. Once you have those numbers in there, you click the A to Z to put them in numerical order. At that point, you can scan your numbers to make sure you don't have any duplicates. In this batch here, we have 2 duplicates. So you can go and change that particular number. Instead of saying 1522, you can say 1518. You can just manually change that number, because the system will give you a duplicate number from time to time. Even in a large batch, if you're checking 30 or 40 checks, scan through those checks to make sure the numbers are not duplicated. Okay? Once you have these checks, you can at that point use the expense report, Joule, whatever database they're using, to list who the payee, the date, the amount. You're doing that from the checks. You can do that from the check stubs, I'll say. Once you have that information, at this point, you're going to start checking the receipts, okay? You want to make sure these attributes here are checked, okay? You're going to, if it's a voided check, the check should be there attached to the check stub as voided. Council check is signed by one authorized to sign on the bank account, meaning that the treasurer signed the check. So the photocopies of the checks on the bank statement should be signed by the check, signed by the treasurer. However, if there's a check written to the treasurer, whose signature should be on there? Not the treasurer. So if you see that, that's another note that you need to make, that the treasurer is not to sign their own payments or reimbursements. There should be someone else endorsing that check for them, not them.
But there's only one signature on that checking account, sir.
At that point, you will make an additional recommendation. There should be a minimum of 3 signatures on the bank account at all times, excluding the pastor per se to safeguard him. Okay. And my recommendation for those signatures would be first elder, assistant treasurer, finance chair, if they have a finance chair, and it's not the pastor. That's up to the board to make that decision as to who they feel comfortable with being those signatories. But the pastor, I would not recommend him at all, just to keep him away from being able to be involved and be tempted or someone to blame or, type thing. And it's just to safeguard him. Number 3, council check is properly endorsed, meaning the back side of the check. Now, some of the photocopies still come with the front and back. Most entities don't send out the actual checks anymore. Some still do if you request it, where they will send you your original check back to you. At that point, you can look at the back to see that John Doe actually signed the check? Or was it signed over to, a third party or something like that, or who actually signed it? That the check cleared within 30 to 60 days. If I wrote the check on January 1, did it clear by March 15th? That's more than 60 days, but you get the gist. Disbursements were authorized by appropriate person on board. Appropriate person or board. This comes back to actually having a check request form in place at the local church. This will show you if it was approved by the appropriate person or board. Okay? So if the client does not have a check request in place, that's a recommendation that needs to be made, that they need to have that in place for pre-approval of all expenditures. Okay? The account destination is appropriate. If I'm paying a check for utilities or electric bill, but it's being charged to building fund, that's inappropriate. It should have been charged to utilities, not building fund. Okay? Auditor traced posting to proper account. Timothy.
All right, help me understand. You said it's not appropriate, but that's what we do at our church. When we give the building fund, we're not building another church. We're not trying to get another location. We're taking care of this building. So these are building expenses. Help me understand what we need to do so that we won't violate that anymore.
Well, in order to properly do your budget at the beginning of the year, you have to know how much you spent on utilities. So by putting it into the building fund, you have no clue. Because if you're putting all your utilities, telephone, light, gas, internet, or whatnot, into building fund, at that point, it's going to take you forever to do it. To kind of go ahead and decipher what's what. By actually posting it to the correct account that says utilities, or gas, or telephone, you can just print that report out and it'll tell you, oh, I spent $15,000 on electric. Who left the lights on? So it's very important to actually charge it to the account that's listed there. And it's listed there for a reason. It's actually listed as a default account already in your Jewel software, if you're using Jewel. So.
One of the problems that I've run into is I would like for the treasurers to make sure they put their utilities in a separate account, not under just a overall church expense or whatever. But the problem comes in when the treasurer's not trained enough, and then I'm saying, okay, they end up building up these negative account numbers and not putting money back into say the utility account or telephone or whatever, but they're writing checks out of those accounts. But they're just growing this constant negative. It just keeps getting larger and larger over time, you know what I mean? So then what happens is when they present their financial summary to the board, they have no idea what's going on. They have all these negatives and don't realize that their whatever account they're using, whether they're using church expense or church budget, or whatever that main account is, they don't know that that those other accounts are being offset by that. So they don't really have what's in that, in that main account. So, I mean, I don't. So my suggestion to them, because it would take me forever to teach them, okay, now you have to, if you write checks out of here, you got to transfer money from this account to cover that, and then that's, I don't know, how do you all feel about that? It kind of seems like it takes a long time to train them, which I want to, but then I don't know. Your comments?
A number of things. If you follow what Okema says, you can also use subsidiary accounts, which means you can say you wanted to run it all. When you look at your report, you just care about a one-line building fund number. you can have all these other things that probably would show under your combined budget, church expense, whatever. We've been through that already. But when you're in Joule, if they're using Joule, you can have a sub-account. I think it's called a sub-account. You click that button, and you can tell it what department to balance to make it a sub-account for. So they can transfer money into that top line, but all the other sub-accounts will just show like negative 1,500 for insurance, negative 1,500 for utilities, things like that. So they'll, at the end of the year, like Okima said, they'll be able to say, we spent 1,800 on this, 2,000 on this. But when they're in their board meetings, they won't see all the negatives because it'll roll up, and hopefully it still won't be a negative when it's rolled up.
I have two quick comments on this report. I think I've seen that one is here, it's highlighted that you have to check all the significant unusual items. And I think that is something that we should look, because this, by doing the sampling, it may not capture some of the significant unusual checks that are out there. And also some of them may also have a debit card or credit card that they are using. By using checks, you might not find the credit card transactions. So we should scan those activities and pay particular attention to those. And the one comment that I have here is the attributes number 3. It says that cancel check is properly endorsed. Now it looks like most people don't even endorse the checks that are issued to them. So I'm trying to see the benefit of doing this test to check. So if you check and it's not there, it was not endorsed, what is the issue? And then the next one is check cleared the bank within 30 to 60 days. What if they are not cleared within 30 to 60 days? What is the implication? Is there any risk in there? So, and I don't see any significant risk relating to this. So is there a way that we'll be able to modify that, or take away that 2 items?
I would say the one for 30 to 60 days is in there to kind of look at the outstanding check type situation, to make sure that the treasurers are keeping track of outstanding checks per se. And they're noting, okay, this check has been outstanding for 30 to 60 days. We followed up with this individual to say, hey, have you lost a check? Are you going to cash it? Type situation. Council check is properly endorsed. I haven't necessarily ran into the issue where somebody else signed somebody else's check. So that is a good question. I mean, we can look over that as a team or a group here, get consensus to see if that's actually important to have.
I would say over lunch, maybe let's have that conversation and see if we need to modify that some. And just a quick question, I know they just told me lunch is ready, but just a quick question also, and that would be, and it may be something that doesn't happen anymore these days. That was a long time ago when I was doing this work. I had a nice treasurer, great fella, but he was paying his utility bills through the church. How do you capture those kinds of, because, I mean, how do you capture those kinds of transactions?
The way that I capture that is, even with this comment here where it says scan all checks, I'm looking at account numbers and the address of the location of the actual bill too. Even though I'm doing a test, I'm looking at way more than what I'm actually recording. Even when I'm doing my bank rec, I'm looking at stuff that's actually already hit here or may end up on here. So I may be doing one test right now, but I'm doing 3 other tests at the same time.
I actually had that happen with one of our churches.
Oh, it still happens.
Yeah, it still happens. And the thing was, it was coming out automatically on her bank bank statements, and then she was also writing a check. He or she was writing a check. They don't know who that is. She was writing a check. Oh, God bless you. So we found it that way, but then also it stopped where everything was going through the bank, and it was just one lump sum. And we were like, how is the church's AT&T bill over $1,000? That's, so the big numbers is what picked us, showed us, made us pick us up.
But multiple payments can actually do that too. So if you see two AT&T bills, you know, do you guys have a cell phone too, or a church
Right.
phone? And if so, where are the bills at?
And I think another thing that I recently came across was that the person was paying money to one of the relatives. Okay. Yeah. So normally what I do is that I ask you, sometimes I don't ask the person, but I ask the pastor. I don't ask the treasurer, and I said, what is a relative of Emmanuel? Does Emmanuel have a wife? What are the kids? So I get the names of those people. So as I do the test, I scan what I do. That's why I said the unusual items. I scan for these names to see if they will, I will see that the checks have been issued to them. And then the control test, there was one step there that said that we need to ask for the vendors of the church. The important thing is that this particular treasurer that I asked, who are your vendors? And they mentioned some of the vendors, but he was paying money to other vendors. So I said, so they are focused on the other vendors that he did. I said, are these vendors, for church transactions? Said, oh no, I made a mistake. I've been, I didn't have enough money on me, and blah blah blah. All this. So these are my personal related items. So by asking them their vendors, you'll be able to know if there are other vendors as you do the test. If you find other vendors that are not the regular vendors that they deal with, you'll be able to identify if they're stealing something or not.
You'll have to bless the food
Yeah.
and dismiss us.
Yeah,
The food is waiting, the food is waiting.
All right, so let's take a moment here to take a break and we'll go to lunch.
That's all we had to stuff on.
All right,
Can we just bring that stuff up?
we're gonna go ahead and jump back into this. What we're gonna do, we're gonna review the test disbursements form one more time, just to go through the actual process of listing the numbers and setting up your data analysis. So the first thing we're gonna do is set up your data analysis, making sure your Excel file actually has that add-on in it. Once you put it there, it should stay there. Unless your computer crashes and it gets wiped clean, you may have to re-add it again, or if you get a new laptop. So what you would do, you would go to File, Options. Once you click on Options, you're gonna get a box. At that point, you're gonna go to Add-ins, which is on the bottom left-hand side there. Click on Add-ins. Once you clicked on Add-ins, down here at the bottom where it says Manage, make sure that this drop-down box says Excel Add-ins. Once you see that, just click on Go, and it's going to pop up another box. When this box pops up, there may not be any check marks there if it is not already in your system. If it's already in your system, there will be check marks. So you want to check off the Analysis 2 path. And I would say just check off both of them because I don't know what the VBA is. So I'll just check off both of them. And just click OK. Once you click OK, here in the top right corner of the Excel document, you'll see Data Analysis pop up. That's if it's not already there, okay? Once you've done that, now you're able to begin your actual sampling process. So you've already put the check numbers into the system, and you're going to be getting 6 samples. So over here, you're going to put your checks.
I don't have the data analysis. I'm missing that.
Okay, I'm sorry, you want to click on Data.
Well, what I'm missing is that whole set under, all of those. Somehow I just have that on.
Okay. We're going to get the Excel expert there.
Obviously, I took them off one time and I have no idea how to
And over here in column A, you're gonna list all of the checks that were written in that particular period that you're auditing. Okay? So you'll list 1,500 through
Oh, okay, awesome.
30.
You just said go to do all the way up to 1530?
Correct. So in your data analysis, you click on that and you'll go to sampling and click OK. At that point, it's going to pop up a box where you can start inputting your data to actually get your population of their sample. So in the first input range is the actual list of all of the checks that were written in that time period. So this range here is for checks 1,500 through check number 1,530. Then I'm going to go down to where it says random number of samples. That sample number is 6. Now you can do 7 since it's 6.2. You can do 7 if you want to, just to get an extra number. That's up to you. Your output range is going to be the actual number of samples you're doing, which is 6 samples. However, you're going to put that here under the check number box. Okay?
So big, so big.
So there in column B, where it says check numbers, let me just delete all that. So in column B, you'll go down until you see 6R. So it's actually counting for you. So if you had 14 samples, it'll tell you that you're at number 14 right now. So it'll say 14R, okay? But we only need 6. Once I have that, it's in my output box already as far as the range. I'm just gonna click OK. At that point, it's gonna populate my numbers for me. However, they're not in numerical order. So you would just click on the A to Z button to put them into numerical order for you, okay? At that point, you're gonna look for duplicate numbers, okay? And we do have some duplicate numbers. So 1516, I would just change that manually to 1512. Once you've done that, you'll get your check stubs, enter the data into the system as to what's on the check stub, who the payee is, the date, and the amount, and so forth. And just going back up to the attributes, just saying if check 1500 is void, you will put a check mark in the first box. That's the only thing that will be there for that voided check. All the other boxes will stay blank because they do not apply. Okay? For 1510, you would do the exact same thing. You know, if you checked everything but it doesn't have supporting documentation, you will leave supporting documentation blank. That way you know, okay, how many items actually don't have supporting documentation. Sonia.
Is there a way to add the columns numbers on top? Like where you have the check mark, can we put a number 1 to correspond with the attributes that's up top so you won't have to be flipping back and forth?
It's there, it's just the way the Excel file is set up.
Excuse me, sir. Okay. It's there.
I mean, if we expand it out, it's kind of,
Okay.
because we have those drop-down menus where you can decipher through the information. Just saying, if you're looking for a check that has, if you have multiple checks that have $100 on it, per se, you can sort through that
I got it.
to see, okay, which $100 check didn't have a receipt.
Okay.
Okay. Okay, so you can disable the filter. There's a button here that says filter. You can disable that to actually show the numbers. Okay. See, I didn't even know that.
Yeah, see, so that's why we're talking together. I like that.
Are we removing 5, 6? Sorry, 6? too? No, is it right that you have?
Yeah, we went through, but number 6 and number 7, aren't they the same thing?
Number,
But that's not, it didn't look like that.
you said number 6.
Okay,
So
got
like,
it.
I need to change it, I need to actually have,
Okay. So once you've done that, I mean, you're pretty much in the process of just going through the actual check stubs, checking the receipts, and you want to make sure if that check has a memo, put it in the comment section as to what it's for. It goes back to what we were talking about earlier, if there were multiple, if you find multiple utility bills being paid, this is a way you can capture the account numbers. In the comment section, you can put the account number of that utility bill that was paid. Okay? That way, if you get another utility bill and you see another number, it's possible the church could have 2 units. If they have 2 buildings, they're going to have 2 meter readings probably. So you want to be cognitive of that particular issue as well, and not jump to conclusion and say, hey, this is a personal bill. So make sure you do your research fully on that part as well. But you want to make sure you look at that address too. That'll tell you where that meter is. All right, any questions on that form since we've gone over it? Timothy?
Can I see that one, please? All right, so now that we have always had the checks form, are we gonna have anything for other type of disbursements? Like people are now doing 15 or so transactions electronically.
We're going to work on that as a team. That's
Okay.
to develop something for electronic payments or debit cards or credit card type things.
Okay.
Any other questions? All right, let's move on to Form M. Form M is your income test. With the income test, what you're doing, you're pretty much sampling your tithe envelopes, okay? Just to make sure that the actual envelope dollar amounts that show on that tithe envelope match, that sum total of envelopes match what was deposited into the bank, what was recorded on the ledger, and if they have a weekly offering count sheet, what was recorded on that weekly offering count sheet.
How do you account for your Adventist giving? How does that, how do you report that?
Adventist giving is accounted for by the church treasurer printing that monthly report out, which will list each donor. At that point, you will match that to what was deposited into the bank and what was actually recorded to the ledger.
So that's not part of this here.
It can be included in the yes. You would just expand that extra week, so just saying if January only had 4 weeks, but you have Adventist giving, you could just have it here and make comments saying Adventist giving.
Giving.
So it's not necessarily that you need to set up a spreadsheet for that. That can all be captured right here. Okay. And you have a question?
well, I was just, I think you're gonna do it now. What are we, which ones are we testing? Not every single, that's what you're doing.
All right. And once again, you want to make sure that you fill your forms out completely. Sometimes we get caught up, and I'm guilty of that, just doing the audit. But make sure you put the church's name, state, entity ID, if they have that available, the year that's under review, and your initials. The way you do your testing is you're sampling 1 month per quarter. Okay? So January, February, or March, you would choose 1 month randomly to sample. Now, if you're doing a 2-year audit, you don't want to do February and February. You want to do February and maybe January or March in the next year. That way you get a sense of a different month for that particular quarter. That way you're able to actually, by doing it randomly, if something is going on fishy, you're possibly able to see it. It's not always true that you will see it, but it's possible.
Have you had any major issues with testing the tithe envelope?
I think it's important that usually we do December, because what I've seen is that most of the errors happen in December. December is where, normally that's where we have the significant remittance amount. And I always include December in my sampling. When I do the sampling, I'll take December. And then especially when I do December, sometimes some people, because of tax deductible benefit that they want to get, they will bring the check in January 1, and they will still want to force it to December. And I've seen several of that I found that we cancel the treasurers not to do that.
One of the other things that, when it comes to this test, there's certain months that have 5 weeks, and I always test one of those months because sometimes it's a little fishy when it comes to recording those type of envelopes. So I always make sure there's one of the months that have 5 weeks in there.
And the 1 month per quarter is just a minimum.
Yeah.
Okay. There are times that, depending on the size of the church and what I see, I'll do every month. If it's a small church and I'm seeing discrepancies, I'll do each month, just to see if it's a consistent thing, if they're always missing something, And the difference as far as the discrepancy could be, loose offering doesn't have a tithe envelope. Sabbath school doesn't have a tithe envelope. Usually those are the main discrepancies. Our Adventist giving wasn't printed out to give to you, type thing. So you want to make, it's a minimum of 1 month, but at the same time you want to make a rational decision as to, okay, what's really going on here? Is this just a missing of the envelope, or is money missing, type thing? So, and you want to pick key months too to look at. Sometimes around tax season, you want to look at that because people are giving more money during that time. The first 4 to 5 months of the year, you may get more money than you got in December. But December, you do want to try to get that incorporated in there too.
Anything significant about June?
Camp meeting.
It is significant about June because of camp meeting. Individuals may not say we didn't have church that weekend, and they did. So you want to make sure that, even though they say, well, we had church, but we didn't collect money. That's unusual to not have an offering for church service. You should have something for Sabbath school or divine worship, or even children's story. Any questions on this particular form?
Do we do the same thing, the same way, or we just do our own random ones? It says when you take your sample set, we just choose it ourselves?
Yeah, you would just choose the sample yourself. There's nothing in the software, in the spreadsheet to give you sample months.
And then you only are taking a few names to make sure, instead of like all the envelopes, to make sure that it's entered correctly. Is that, I think that's what I'm reading, right?
All the envelopes for that particular.
No, for this right here is all the envelopes. As far as when I say tithe envelopes, you're adding the total for all those envelopes. With this right now, you're not necessarily looking at where the money is posted.
Okay,
You can, but it's going to take you forever to add your envelopes.
right.
My recommendation is to add your envelopes. Then when you're doing Form N with the remittance, you can kind of look at it at that point.
Right.
Maybe compare some to make sure they're posted correctly as far as contributions. All right. Any other questions on this particular form? I was trying to overlook you, Manuel. There you go.
And I think that it would be very helpful if you select the month. You may take 1 week or 2 weeks out of the month, whatever the sample is, and look at and trace some of the names to the remittance to see that they were credited to the appropriate donor's account. there was one that we saw in one of my churches that somebody has been giving about 50,000, 40,000 here and there, and unfortunately, 2 of them got credited into somebody else's account.
Oh, nice.
Yeah, so the person was happy. But later on, I think the person who gave that money was audited, and then they came to us. The IRS wanted that information, and they came in and said, I think they did it in 2010. And the treasurer who was there was gone, so there have been like several treasurers who have been replaced. And when you go to Jewel, I look and I didn't find anywhere that persons gave that donation. But as we kept looking, we realized that it was posted into a wrong account. And unfortunately, the person that got that benefit, incorrect benefit, used it for tax benefit purposes. So, so it's something that we should be looking at.
And also in this test, you're able to, thank you for bringing that point up. When you're adding up your envelopes, you want to look for those who may have given cash, because individuals still do give cash. And when you see those envelopes for cash, see if there's a correction in a dollar amount or something like that. And if that's on a consistent basis with that, that can raise a red flag as well. Yeah. Or if you see somebody giving on a consistent basis with cash 1 year, and then the second year you're auditing, you see one envelope 1 month, and then 6 months later you see another envelope. That could raise a red flag to say, okay, this person was giving every month of the last year, but now all of a sudden, did they lose their job or type thing? But they're still giving the same dollar amount, so that could raise some eyebrows. Okay? All right, let's move on here to the remittance form. And I'm gonna go a little bit faster here, so we can try to cover everything today. With this particular form, you're capturing your remittance information. This is a more detailed spreadsheet. You can get this information from the financial summaries. Very quickly from there, just entering each month's date. So you would say January 1 of 2014, January 31 of 2014 as the ending date, which will show you everything that was collected for that particular month for conference funds, and you can just list it under January. Once you've done that, you can go to your check stubs at that point and enter the amount that was actually paid to the conference for remittance. So for the churches that are late, you're saying January and February wasn't paid, but they all got paid in March. So you may have a negative amount of 100,000, 250,000 here, and then everything else adds up. So you may have a difference, but the ending amount is balanced. Sonia.
Where,
Where's the money?
I'm sorry, where would you go
To find this information, say that again, please.
If you're using Jewel, it'll be on the financial summary. Donation accounting, they have a conference fund section. You can go into that for each month. In the ledger book, you will see that total as well in the loan ledger book as to total conference funds and how much was given in tithes and stuff like that.
So I'm not going to look at the treasurer's copy, meaning the remittance
No.
copy they sent you, they send the
You can,
conference?
you would review that, but I would not use that to record my data.
Thank you. I asked that question because that's a common mistake in my area, so I wanted to make sure we were clear on that.
Yeah. Because on that remittance report, they can say I'm remitting 200,000, but they collected 500,000. So you want to capture what they're actually posting to their ledger versus what they're writing. And once you put the dollar amount as to how much they paid the conference on that check stub, you would put the check date, the check number and the check date. So just saying if, and I'm going to stay down here at the bottom so we can see everything, just saying if Message Magazine, we collected $150 for that month, but we only remitted $120. It's going to tell me I still owe $30. And do amounts equal? No, it's going to turn red. Once that amount equals, it's gonna turn green. So it's kind of giving you that red light, green light type deal, so you'll know if there's an issue versus having to actually add and subtract numbers to see if it's an issue or something.
Yeah, during my audit in my day, this was all I did. I didn't have this spreadsheet, but that's all I did.
Any questions on this, Timothy?
I was gonna say, the date paid, I know some people might put the check date from the actual check, but when we go through, we normally do, looking at the bank statements, which date it actually cleared the bank. Just so that we are clear, I know this is the most, 9 times out of 10, the tithe is the largest check written. So basically, you're looking at the 12 largest checks written for your church. So that's
Good point. So what the consensus of the group, do you guys think it should be changed to date cleared?
Yes. Yes.
No, I don't think so.
Why?
Because in some places, I'm using my conference for example, we have one person who does remittance. So normally when he goes on vacation or something, the remittance are there until he comes back and then he puts them into the bank. Because we are rich, okay, we have money. Okay?
Oh,
Don't worry, we have money. Okay, so if you put a date that the check cleared, maybe you have received like 2 weeks or 10 days, and the date clear will be like 14 days. So you may think that the church is late, but the church is not late. So normally what I do is that on the conference I do it with the conference document. We have the date that the treasurer posted the remittance and the date that the remittance was received. So if the remittance was received on the conference on the 10th and it clears on the 20th or 30th, whatever it is, then the check came in on time. It's just the conference that didn't do their job and deposit the money on time. So that's why normally I don't want to go with the date that the check cleared.
Okay, so what are we gonna do with the churches where they write the check in January for the January, but they don't send it until March?
Yeah, that's what I was.
So, it's a give and take, I guess.
I would say there's several scenarios that we can use. Like the one Candace just mentioned. For the Jewel software, I know you can continue writing checks into the very next month. It can be February 28th, and you can still be in January writing checks and closing out. When you close out that month and you're printing your checks through Jewel, and you post your remittance, it's going to post that particular month's remittance in January, even though it may be February 15th. So, I mean, I can agree with the date cleared, and I can agree with the date that's on the check. It's kind of that,
So we need to decide.
what's the best route to go, and which one may be the best to look at.
I'll say this, I know 9 times out of 10, it clears the bank in a good time limit or time period. I'll say it like that. However, when I get to the end of my audit, normally the outstanding checks that are really affecting the bank reconciliation are usually on here. So churches that may be behind in their remittances, it's going to show here. So when my recommendation comes, remit to the conference, by the designated date each month, I'm making that recommendation and basing it on documentation that, these things are floating. And it goes back to something I might have said earlier. Is it a church policy that you're so late getting these checks in? Now, you can always say, well, y'all are just holding it late. But if it's a month, 2 months, 3 months down the line, that's probably not going to be the case. So,
I'll throw another option in as far as remittance report forms. I mean, we put the date received on that particular form, so we could use that particular form to say, instead of saying date paid or date cleared, we can say date received, because once we receive it, we put the date on there.
but you wouldn't have that there.
The date, I would recommend to go by the date clear according to the bank statement. And my reason for that is I encountered two churches where, according to the conference, somehow the conference secretary, she had them check out as received. But during the audit, it came out to be that they were still outstanding. And these were remittances from 2 years ago, which were still outstanding, and the church, once we double check with the church treasurer and the books, it was outstanding. So that's the only way you find those is when you look at the bank statement and you register the date when they were actually clear.
What exactly are we testing? Are we testing if it has been received to the conference, or are we testing?
I think we're more so testing if we received it, not necessarily the clear date per se, but I think we're testing to see, has all conference bonds been sent to the conference?
The original spirit of this was what he just mentioned. So the conference treasurer can then see if the clerk, how long it was taking the clerk to deposit the funds. So it served a dual purpose originally. So when you asked for the date clear, you really wanted to see the date the conference actually cleared that check.
So, with all that said,
I think it should be based on the auditors.
so Emmanuel's going to be by himself for this.
Yeah.
I think that, if possible, let's leave it with the auditor's judgment. Because sometimes it will be, if the church is consistent, if you see that the church is always clearing like 3 months later, then probably you know that the check doesn't get to the conference on time. But if maybe once in a while, then it's like they send everything on time, and there's one that they were like 2 weeks late, then probably you know that maybe the conference made a mistake. And also we can work with the conference, the person who's doing the remittance, they have that kind of report there. That before you go and do your audit, you can get the remittance report from the person who is doing the remittance. And you'll be able to see the date that the person recorded as received. So let's say the person recorded received on the 10th, and the check has not cleared like a month later. Then probably they put the wrong date on the date that it was received. So I think probably we can leave it to the auditor judgment.
Let me say this. What Luis said was so clear. I've gone there, I've gone into an audit, I've seen a $300,000 check. I called back and I said, this check is outstanding. And at the office, they say, what do you mean it's outstanding? I'm saying, 12 months ago, you never got this money. It never cleared the bank. The only way we basically found it was doing this spreadsheet. Number one, the treasurer of the local congregation knew, and the treasurer said, it's not my job to do your job. So, lost in the mail, or, you just weren't following up to see if you double checked and things like that. I don't think I can get this information necessarily as easily as I can just go look bank statement to bank statement and see if the checks have cleared or not. I mean, that would be an extra step. I understand you can just print a report from the office before you go into the field, but I still think, but I'm not going to argue anymore.
Are we going to make some comment to the last one?
Would it help when you're doing your bank rec? And you can look at your bank rec and you can see your outstanding checks. And when you see a number that is way out of, in terms of sequence, if you're in the 3,500 range and you see a check that's 1,000 points back, or 500 numbered back, that's a flag right there to say, why is this check still outstanding after such a long period of time? And that's a flag right there for you to try to capture that.
All right, so we're gonna leave it as is, okay? All right, we're gonna go to the next form here. Form O and P are pretty much the same thing, except one is for the pastor and one is for the treasurer. On these particular forms, you're capturing the disbursements made to the pastor and treasurer, okay? And during this time, you're looking to see if they have turned in all the receipts, supporting documentations for them. Now, proper supporting documentation is not an email saying that I purchased a pencil from Staples for $5, along with an external hard drive for $100. You need the actual Staples receipt, okay? So the email is not, I repeat, is not supporting documentation, okay? Not even a handwritten note. Credit card statement is not a supporting documentation for a receipt. You need the actual receipt. They print it out, they call it a receipt. So you need the receipt. I'm saying receipt several times because some people don't understand what a receipt is. And I'm speaking of church treasurers because they will accept just a simple note saying, well, he said this and he said that. It's still not a receipt. So we want to express to them what an actual receipt is or what appropriate supporting documentation is, okay? And now we're going to turn this over here to Emmanuel.
Okay, we are going to do the fun part. This is the fun part. Because if you spend all the time doing the vouching and tracing and checking and doing all those good stuff, and you cannot issue an audit report, then to me, you didn't do the work. You know, it doesn't matter how many days that you spend on that audit. Because eventually, your report will show that you did the work. You know. So, in the reports, what we're going to look at is that we have to issue the balance sheet. You know, balance sheet, and then we issue income statement. But the balance sheet here, we have certain items here that's going to help you in your disclosure. The first thing that we have here is cash. And sometimes we put cash on current assets as current asset, but it may not be a current asset cash. They may have a place or a hold or something on the cash. So it's not readily available for them to use. So the disclosure is going to help you to know which assets are current, which assets are long-term, and which liabilities are current and which liabilities are long-term. So for example here, it's restricted cash identified, okay? If the cash is restricted, then it's not readily available for them to use it for utilities and things like that. So they want you to disclose that.
Give us an example.
Okay, so for example, if the church has cash and is for youth program, youth camp meeting for something, okay, the church collected the cash. And on their bank account, the cash is going to be mixed up with operations. So since this cash is restricted, we want to separate that cash out from all the regular other cash that the church may have. Because it's not for them to use. It's for the youth to take it to the youth program. Any more questions on that? Is it clear?
How would you list that on the balance sheet though?
Yeah, on the balance sheet, when we get to the balance sheet, let me show you quickly here. We have a balance sheet that I was going to show you quick. Okay, so the balance sheet here, you see how we have the current asset? Yeah, so that will be that will be the current asset, the one that they have available for them to use for operations. And the other ones will be on the other assets, and we'll get to that point. Okay, so, and then they have notes receivable. And normally the curve note some people put the curve note as investments. Some of the churches have investment in curve. They buy curve 90-day demand note. So that can be a note receivable or an investment. We put an investment, that is fine, but that can also be a note receivable. And there's only one occasion that I've seen that the church loaned money to an employee. I think the person wanted to buy a house, and the person was a deacon, was hardworking, and everybody loved the person in the church.
Wow.
And he didn't have the down payment for the house, so the church was nice to give him about $15,000.
Wow.
So at that particular point, that would be a note. Yeah, some of the churches are rich. Yeah. So at that point, that would be part of the note receivable. Yeah. Note receivable. And if you look at note receivable here, it says note receivable from employees, and normally it's not employees, like church members. We change it to church members. Yeah. And then, if they give the money to an employee, then there should be an allowance, because what if the person is not able to collect it? So they need to set up an allowance just in case the person is not able to pay in there. So that is this form. And then some church have property and equipment. They may have computers, they may have desk and chairs and all those stuff. And if they want to do an accrual basis of accounting, then you expected that they have the depreciation and they depreciate them over the useful life of the asset.
But for most of our churches, it'll be just cash basis.
Yeah, for the most part, once they buy it, they expense them.
Right.
Yeah. We have 2 churches in my conference three that they do complicated accrual accounting basis. Yeah. Okay. So basically, that is that. And then we have liabilities. Okay. With the liability, we have the current and the notes payable. And some of the churches also have a loan with curve. And that loan is both current, part is current and part is long-term. Because every month they have to pay a certain amount. So what I do is that, let's say the church owes $100,000 in curve loan. And 1 year, they're going to pay $10,000. So the $10,000 will be what is due currently, and the remaining $490 will be the long term. So I try to separate them out so that you'll be able to know how much money that they need to have available for current transactions.
So for a cash basis only financial statement, how would you record in December the tithe money has not actually been sent? How do you record that?
Because that one would be because it's cash basis, you don't record that, but I record that.
When you disclose it?
I disclose them.
Okay.
I disclose them in the financial statement.
Okay.
Yeah. To show that that's money that they're going to pay, in 2 or 3 months or a month or something like that. Okay. So that is. So this is just the disclosure to help you prepare the balance sheet, and we get to the balance sheet side of it. Okay. And then we also have to prepare the income statement. And most of the items here may not be applicable to cash basis, and there are a few that probably may be applicable. On the revenue side, they want to know what are the major types of revenue and expenses that they have in the church. Okay, so normally I've seen one audit report that they put expenses, everything, 1. And revenue, everything, 1. So there's only 2 items on the income statement. Cash, revenue, and expense. Lump them together. So this one is going to help you to break them down, because some of the revenue items are significant, some of them are not significant. So the significant items, we want you to break them down as to how relevant that amount may be. And we have something called here that's extraordinary item or unusual item, and this is not something that you're going to be using. It's going to be non-applicable for most of the churches and the schools. And then they say here that, and the other disclosures to help you to disclose if there are any illegal acts. I put on here. And the legal acts is that normally you find this when you look at the church board minutes. And sometimes maybe somebody has molested a child there. There is, sexual allegations, whatever it is that is illegal. That probably may result itself in court. We just put them there so that the board will see that they may have some pending litigations that are coming up in the income statement. So taxes may not be applicable to your church. Real estate activities may not be applicable. So this is to help you to know which items may be relevant for your entity. Okay, and then as we keep going on from Q3, again, it is the same notes, and we have here about cash and cash equivalents. Sometimes the reason why we have that there is that some of the church board members don't even understand what you are putting in there. If you say investment, some of them may not know what investment you are talking about. If you say notes payable or notes receivable, they don't even understand it. So we just put it there so that you can explain it a little bit what that one is, So, oh, okay. And then the loans, if they have a loan, we want you to show the interest rate. There was I did one board meeting that they had outside loan, and the interest rate was 10.5, and they were not showing. So when I showed that, and when I show that, I put the curve rate there, and then somebody asked me, so how come curve is charging like 4% or 4.25%, and we are paying 10%? And they were like, oh, we didn't know. That's why they're paying. So if you disclose them, it helps the board in their decision making as to whether they should continue with that loan or they should move to curve or whatever they want to do. So again, that is also a no disclosure that you can read and apply the ones that may be applicable.
Before you move on to
yes.
Number 14.
Number 14, okay. Food and close food, all the footnotes?
Yes, what does that mean?
Okay, so what it means is that sometimes, let's say you are doing cash, and then they have petty cash, they have savings account, and they have checking account. The balance sheet would take the summary of cash. It won't take petty cash and this and that. So to foot means that to make sure that the numbers that are on the footnotes are also matching the balance on the face of the financial statement. Okay.
All of your additions, everything
So,
adds up.
Yeah.
Okay.
So
In
for
a layman term,
for example, when you look at the cash and cash equivalent here, the one that says note 2, okay, the note 2 is going to be, when you go to note 2, you're going to see petty cash, checking account, savings account, and stuff like that. So that's where it's going to, I think I need to create another spreadsheet to put the notes there so that you guys will see how it's going to flow to this. So we want the notes and the face of the financial statement to be the same. And I did one audit at Legally East Conference, and even I was GCAS, and we made a mistake. The face of the financial statement, the notes had different amounts, and we didn't know. And then when we had the constituency, somebody said, how come you say we have cash of 2 million, but here we have cash of 5 million? So we don't want that kind of discrepancy in there. That's why we want you to foot them, means that add them up to make sure that they are correct.
And remember, some of the language that you see in here, we're using the standards, for our review, the standard language. So that's the reason why you made some of the lingo here. It's just what the standards are using. So.
Yeah. Okay. Any more questions? Move on. Okay. And we have this form. I'm still thinking about this form as to the relevance of this form, statement of remittance, because I think Okimos helped us with the other one. I think it was N, right? Okimos, the one about the remittances and stuff. Yeah. So basically, if you're going to use it's N.
This is a summary.
Okay. Yeah. Yeah. Okay.
I can respond to this one. Yeah. you're comparing this with the other spreadsheet that we had. This one here serves as a note. When a banker is looking at your financial report that you produce, especially when you're using cash basis, remember that all of the numbers may not be captured in your income statement. There are times when, because you have your trust funds, so because your income statement may show just the local church funding portion, this in your notes gives more detail to the banker to say, besides what they receive for local funding, there are additional monies that come through the pockets of the membership. And this is just like where we are.
A disclosure.
Yeah, it's just a disclosure. We do the same thing for when we are processing your loans for revolving fund. Even though we know the local church does not keep the tithe, we use your tithe dollars to help to compute how much you're going to receive in a loan. So this is more of the disclosures just to give the strength, the overall strength of your finances besides above what you receive locally. So that's the reason for that.
Okay.
So this report is connected to Form N. So
Yeah.
as you're filling out Form N, the bottom portion only, as to the amounts that are remitted, is being filled in. Because the top portion, you may have to alter. You may not have in-gathering, you may not have staff of school that's been given for conference funds. So you would have to input that data yourself. However, the actual amount that's being remitted, check amount and check dates, that'll feed in automatically as you're already filling out the previous Form N.
Yeah.
We will go through a lot of that if that's needed.
Yeah. And then you may have an item here that is specific, that may be specific to your conference. You can insert a line, to put it as maybe applicable. And if something is not applicable to your conference, you can also take them out. Yeah, as you go through the form. Okay, this is the one that I was waiting to get into. Because this is the one that I'm most interested in.
Yes.
Yeah. This is the analytical procedures. And if you do the analysis correctly, you may do less of the detailed vouching and tracing and doing all those things. The analytical wants you to know if there's any plausible relationship between the accounts. If one account increases, why did the other accounts decrease? For example, we all expect, or have an expectation that always tithe will be more than combined budget. Okay? Normally, members give tithe. When they give tithe, they give about 50% of tithe as local church funds. So if I see that the local church funds are more than tithe, then there's a problem. Okay? So then analytical procedure is going to tell me that I have a problem. I have an unusual relationship that we normally expect. And I did one church in my conference, and strange enough, only one person, they have about 20 members, only one person gave tithe. And that was unusual. I have never seen that. So anytime I do an audit, that's the first thing that I do. And my question is, why is it combined budget more than tithe? Because there's no way that average Adventist will give more to the local church than to tithe. So what I found out was that they were recording the tithe income in combined budget. So that's what they were doing. And he said that, accidentally, he said, he didn't know, it was a mistake, and all those things, If I don't do analytical and I did the vouching and the tracing, probably I wouldn't have come out. Or I may find out and say, I found this immaterial, small amount, so I would have passed over that. So that's why we have to do analytical procedures. And it's very important.
What if
you did find out that that was true, what would you do?
If I find out that it's true, then I need to do more of my detailed testing into the combined budget. You know, so what I did was that I did 6 months of testing, and I found that I saw more. So I ended up doing the whole year, and I found that the local church was owing the conference over 70,000.
Wow.
Yeah. So when I told the pastor that they were owing 70,000, they're like, "Well, I didn't know that," and blah blah blah, all these things. And then I went back to the previous year. Yeah. And I found out that they were owing us more than that.
What I meant was, I know of a church where they do give way more to combined budget than tithe.
Yeah, that's
If you give, they may not even give the tithe. I checked every receipt, every envelope. Could be 1,500 combined budget, $10 tithe. What would you do then?
And that is fine, and again, because that is unusual expectation, then I need to do more testing on that. If I do more testing and I find out that that is what the church does, the local members, I look at the envelope and that's what they do, then next year, when I'm going to do the testing, I'm not going to do more detailed testing again, because I now understand how the church operates. Is it making sense? So I do this for all major accounts. Let's say utilities, building fund, whatever that they may have there that is significant. And I did that also to find that somebody was paying his utility bills, okay? Because when I look at the average of their utilities for the past 3 years, I think was ranging about 10,000. So I was like, okay, then I'm expecting it to be 10,000 or 12,000 or 10% of it. And I found out that with that particular month or that particular year, they were paying 18,000 in utility bill. So the next question is, why this? So instead of me vouching in other expense accounts, I will focus on this expense account because that's where they have significant risk. So the analytical procedure helps you to find risky areas there so that you'll be able to focus your attention on those areas. If you don't do this, then you'll be focusing on other items that may not be important.
Okay, so when we're looking at this report, are we looking at the financial statement and we're comparing it between the current year and the previous year and looking at differences, and then we pull out those large differences and do this sheet?
Correct.
Okay.
So that is the purpose of the analytical procedure, to help you to identify the unusual relationship. Any question on this? And I think that if you do this first, your life will be easier. Okay? You'll be able to apply your efforts where they are needed. You won't just go there and just do random audits.
Can we just call you?
Yeah, sure, anytime.
Come do that.
Anytime I can help. And that is why we have the ratio here. Like for example, tithe, combined budget to tithe, the ratio, the expectation is about 50%. Okay? So if I see that this year it was 60% and the tithe went down, then the question is, why did tithe go down? Is it because the treasurer is putting money into their tithe account, into their combined budget, that's why it's down? Or is it that some of the members don't pay tithe anymore? So whatever it is, it helps you to identify the risk. And normally when the church is doing renovation projects, that's the time that we find this very useful. Anytime that I see a church doing a renovation project, the tithe is way down, the combined budget somehow is way up. And I found some in my local, churches, some of the other local churches, not Okimo's church, but some other local churches. Yeah. Any more question on this? And again, you can use this for any item on the financial statement. Any item that is significant.
And And review standards require an.
Analytical, yeah,
Right.
yeah. If you do a review standard, we are doing way more than review standards.
Right.
If we're doing review standards, you won't do any vouching, you won't do any tracing. Only thing that you will be doing is just analytical. Then we are done. But we just want to be Adventist in good standing, so we do a little more.
We want to save time to do it in 1 hour.
Okay. And then here is also to help you capture the recommendations that you may have for the client. You know, sometimes if you don't put the recommendation down, all the issues that you may have found on cash disbursement, on remittance tests, whatever it is, you put them here to help you so that once you are writing the final audit report, you have them already. And then it's going to serve as a note for the other person who may come after you to do the audit. Okay. And then we have the nicest one, which is the opinions. And again, if you do the audit and you don't issue an opinion, it means that probably we didn't do the audit. If you do the audit and you did it correctly, you know, you should come up with whether the client's accounting records were free and fair, everything was fine, or you cannot issue an opinion because of whatever the reasons may be. So this is to help you draft the opinion. And with the review audit, there are only 2 opinions that we can issue. We can issue a disclaimer. In this particular one, we said that there's no sufficient competent evidential matter. What it means is that we didn't find enough basis to support the audit. You know, so basically the client didn't do a very good job. He did very horribly. You know, we didn't find tithes, receipts. We didn't find bank statements. We didn't find invoices to support that the expenses were correct. These are the kind of things that can lead you to issue this kind of opinion. So basically saying that you did not express an opinion because you didn't find enough evidence for the audit.
Question.
Go ahead.
This letter, I think we talked about it a while back.
Yeah.
Outside of the meetings, as far as the auditor's name and title and things being on the letter. Is that something that you would actually recommend, or?
No. I don't recommend that you put your name in there. You don't put your personal name in there.
Right.
If you put your personal name in there, what you are saying is that you are going to assume full responsibility for this particular audit, not your conference taking responsibility of your audit. You know, and we don't want that. We want the conference to have the responsibility for issuing the audit report.
So
we need to take out your name out and your title. You can say auditing department Potomac conference or auditing department Chesapeake conference, and then that's it.
So do we need to create a signature per se for Potomac conference?
Oh yeah. You can sign for Potomac conference because you are authorized to do the audit for Potomac conference.
No, I'm saying as far as like GCAS have on their audit, they have general conference as a signatory type thing.
Yeah,
They
you
have
can do
general
that.
conference president.
You can do that. Yeah. Or you can personally sign, but not your name. Yeah.
And let me pass the mic. Got it. Because remember that there are some banks that are going to end up using these financial reports. You don't want to be held personally liable for the information that you've released. It is true that we have you insured, but the banks may come after you. You're representing the organization. Let the organization's name be the one on the document and not your personal name. You know, so remember that. That's very, very important.
Yeah.
So.
Because if that happens, the first thing that the lawyer is going to say that, are you qualified to do the audit? That's the first thing. And with that, they will ask you whether you are licensed in your state, okay? Which you may not be licensed in your state, and then you're going to be held liable for that. So you don't want to put your name with that. So that once you leave the company, you go home in peace. Okay. So this is also the disclosures, helping you.
Excuse me, though, do we have more than one? Is this the only sample we have?
No, I think we have other ones that are coming.
Oh, it's coming?
Yeah.
No.
But the one that I showed you is when we're going to issue a disclaimer.
Oh, okay.
Yeah. And we have one that we're going to issue an unqualified opinion. Okay. An unqualified opinion is the best opinion that you can issue. It means that the client did everything correctly. You're satisfied. You've got all the necessary documentation to support the opinion. And again, you just fill it out. The form is already set up. You just change the date, and then you put the name of the entity and those kind of things, and then you are done. And I think that when we start using this form, I think it will be better you call the local treasurer and explain the unqualified to them. Because sometimes when they see the term unqualified, they think that, oh, so what did I do wrong? Why didn't I get qualified for the audit? They don't want that. They don't want to hear unqualified. But unqualified is the terminology for review engagement, for the report, the standard report. It means that everything was perfect, we did everything correctly, and you're good to go.
Just a quick question. I know gap statements, the opinion letter has changed a little bit. Is it my understanding that for reviews there has been some new releases, and if that's the case, do we need to modify this some? Because we want to make sure that we are always in compliance with standards. So I'm not sure if we can find that out, I'm sure, but I know that they've changed the way the report is done a little bit. So I'm not sure if
they have changed the audit report, but not the review report now.
Oh, okay, so that's, okay, okay.
And with the review, the opinion is just that I'm not aware of any material modification that should be made to their company financial statements for them to be in conformity with the basis of accounting described in the note. Basically, that's it. Meaning that you didn't find any issue with the audit.
Okay.
And then sometimes there may be some qualification, okay? The client may have done everything right, maybe there were some other material area that didn't do well, or you didn't have evidence to support the opinion or something like that. So you are giving a qualification. You are showing why you cannot give them a full, clean opinion. So if that's the case, then we have the qualification aspect of it. Let's say, for example, you're auditing remittance, and January up to November, you had the remittance statements there. But in December, maybe 1 week in December, they can't find the remittance report. Because you have done significant part of the testing, they have all those documents available, but there was 1 or 2 that were missing, you can put it as a qualification by saying that everything was good except for this or that area. That is the opinion. Any more question on this? Okay. So once we're done with that and you issue your report, we have what is called representation letter. Just basically telling the client that you are done and you want to find out if there is any other items happening after you finish the audit. After you left their site, and before you issue the report, did anything happen that you should be aware of? And once they say that no, then you are done. Then it means that they are fully responsible for the financial statements. So the manager, so basically here is telling them their responsibility and the responsibility of auditor, what they were supposed to do and what they shouldn't do, and what additional information that they may have for you, those kind of things here. Okay. And then we had something called subsequent events. Subsequent events is before you issue the audit report. There's something happened. Okay. Let's say, for example, when we finish the audit, before you issue the audit, we found out that the church building has burned down. It's burned down. So that is an event happening after you did the audit. You need to disclose that so that the users of financial statement will know that this is what is going on in the church. Or they have lost half of their membership. Okay? You need to disclose that so that the users will know that, oh, okay, this year they had $10 million in tithe. Since half of the membership are gone, they may not have $10 million next year. Yeah, so that is a subsequent event if something happens like that. So you just put whatever happened in there, which will be reflected in the financial statement. And once you do that, then you get to the review checklist. And this is where you're going to be going through this to make sure that you've gone through the program, you checked all the things that you did there. And here it's saying that the report in accordance with the wording recommended by Columbia Union, that is the report that I showed you. And whether all the dates are properly stated in the report. And I had one audit that I saw that the person did the audit in 2012, but the audit report date is 2002. Okay? Even though he did it in 2012, but because the date says 2002, then it means I didn't do 2012. Even though he wasted all the time doing the audit and going back and forth. So that's why the date should be correct. You need to make sure that you have the correct date there. So once you go through all the checklists, and then you are ready to release and send a report to the client. And here is the other challenging area. Probably some of you who have 2 or 3 auditors in your place, once you do it, somebody can do the technical review here for you, for the person to just check to make sure that you did all that you're supposed to do. Not that the person is going to test you to see whether you're a good auditor or not, but to make sure that you went through all the stuff that you should have. And this is done by the technical reviewer. And if you are just one person, what the question will be if just myself doing it, what I would do is that probably, I will let the treasurer, I'll say, this is what I did. Could you quickly verify this for me? And stuff like that. Okay. And then once you finish everything, then you need to create the auditor's log. Basically the church name, the location. If you stayed in the hotel, that would be a clue for the next auditor. If you are not there and somebody's coming to do the audit. And the person, they put here the hotel rate and stuff like that. So for them to know, how much it's going to cost you, cost the conference for the audit. And then the hours that you spent for the audit is very important. Sometimes you don't put them there, but we need to put them there so that for the planning purposes, you'll be able to know how long it's going to take us to do the audit. It doesn't mean that the fact that the person spent 10 hours last year means that you should spend 10 hours. Several things might have changed from the time the person did the work. Maybe they have a new treasurer now who doesn't understand the accounting. Or they may be efficient now because the treasurer corrected all the recommendations and stuff like that, so it might be less.
There is one form that we forgot to go over at the very beginning, titled Procedures. This particular form would capture the time, the log time as to how long it took you to do a particular test, who completed it, as well as the date it was completed.
Yeah, I have.
So by using this log here, you will be able to know how much total time it took to do the audit, to put on that last page there.
Okay, very good. And then we are almost done. Then here, I'm going to send you another form. Looks like I sent you only the half piece. The balance sheet is going to list all of the assets that a company had and all of the liabilities, okay, that they had. So I'm going to send you another balance sheet statement for this one because this doesn't cover the other liabilities that they may have there.
So can you do a modified cash basis financial statement?
I have some in my computer, yes.
Okay.
Yeah. I have some here that maybe I can save it and put it here for you to see. Okay, and here is this form. I'm still thinking about this form because most of the churches, they want to see this is a functional basis,
Right.
but most of the churches want to see departmental level of accounting. Let's say they want to see how much money came in youth ministry and how much did they spend, what is their balance. And I think if I can show you some on my computer to see what I'm...
I think this came out of the blue book,
Yeah.
the treasurer's manual, and the treasurer's, local church treasurer's manual, I think.
Okay. So this is the report, and if I were to show the front, it will be the church name, the cover page. The cover page has the church name and the conference that is doing the audit. The reason why I do it this way that to make the users or whoever knows that it's Chesapeake Conference who is 100% responsible for this report. Okay, so this is the balance sheet that I was talking about. So this particular church, they have checking account. So these are all the check balances that they have. And normally I do it for 2 years,
Right.
so that people will know if there's any changes to compare the balances to the previous year, so that they'll be able to make an informed decision about that. And then if they owe the conference, let's say at the end of the year, by December they didn't send their remittance, then it will be, that's what I have due to Chesapeake Conference. And if sometimes it might not be just the tithe, they may owe the conference for other things, other accounts receivable. And also here, I have it here showing the notes payable to the Columbia Union, the Union Revolving Fund. I put them there. But the problem is that since I cannot show the asset, the building in the church's records, I need to do what is called capital loan offset to take out the loan back, to take it out of the financial report, because now for me to show the loan, I also have to show the corresponding asset. You see, for me to be able to help it balance, I need to come down here for the fund balance and take out the loan amount. That's why we see the loan amount here as negative. I'm putting the loan balance here as positive so that people will be able to see the balance that they have, because they have a loan with the revolving fund. Because it's a cash basis, I can't show the balance of the building, because the building is in the conference's name. It's not in their name.
Where's the mic? Come here. Make a quick comment on that. Here's one of those places where to strengthen your financial statement, and I like what he's done here, but if I was doing the audit, I will also include in my notes the fact that we do own property, but the property is not listed, is listed with the parent organization. And whatever the value of the property was when it was purchased or when you got it, I would include that in my notes. So that strengthens, because I'm thinking about if a bank was to use my information, I need them to know that even though there's a cash basis or modified cash basis, that I do have some more assets, even though it's not in my name. It's not capitalized on my books. So, and you may have borrowed, you borrowed $437, but the project may be worth $1.5, $1.6, $1.7 million. I would like to disclose that in my notes so they know that it's something that we own, but it's in the name of the
conference.
in the parent organization. So yeah.
Okay, that's a good point. Yeah. Okay, so I put it here, and then I show them the fund balance. I want you to look at this. This fund balance is for all of the activities that happen during the year. You see that here they had 24,000 in 2012, but 2013 they had 179,000. And I should be able to show another report that accounts for this 179,000. Okay, and then I put here that notes to the financial statement and integral part of this statement, because without looking at the notes, it's very difficult for me or whoever to explain the change, that amount in there. So the next page, I have it here. Let me go quickly so that the name will not appear.
I cut away.
Okay.
I anticipated that.
Okay, good. Okay. So here I also show a note, about the church's remittance. And if you look at the other side, they owe in the conference 105. Like the conference is owing the 105, So a total offering, and then the tithe and the offering, and then the balance. I'll get the total and the amount that was submitted to the conference, and if there's any difference there. And I put a note here, Columbia Union Revolving Fund, this is how much they owe the union, and the interest rate, and their monthly payment, for them to know how much they pay each month to the union. And then I'm trying to go quickly here so that nothing shows here. This is the report that this is the report that I was talking about. Okay. Instead of doing the report, the other report that I showed you, let me see. The other report, this is what basically most of the churches, especially in my area, this is what they are interested in. Because they have them by departments. And they want to see how each department is doing financially. So they have the combined budget. And then after the combined budget, they allocate the combined budget to other funds. So most of the time the combined budget is zero because they have allocated. And then they have Sabbath school. So Sabbath school income that came in was 101,767. And then the expense and the transfers, if there's any, and the balance that they had from the previous year. So that as of December 2013, this is what Sabbath school had. That's the fund balance for the Sabbath school. And if you look at this, the church expense had a negative balance. So what it means is that the church should either find a way of funding church expense. So this will help the pastor or the elders to be able to promote more so that the church may be able to give more. And then I have it here for operating. Okay, so the money that they have available that they'll be able to use for operating purposes, even though they have a cash of $100,000-something there, but what they have available that they can use for operating is $31,000. And the remaining balance is for these other funds that they are restricted type, that they cannot use. So this is what I was talking about, that's what I'm showing you, so that you'll be able to let the church know that even though they had $200,000 in their checking account, but what they can use for operations is just $31,000. The remainder is for memorial funds and these funds that they have there, and the building fund. Any question on this? So I'm guessing that if possible, you'll be able to use this report for some of the churches, because the other report that I was showing, it doesn't show what the departments have. And most of the churches are interested in showing what the departments have. The other report just shows all the expenses, all the income, and then the fund balance. So if a Sabbath school department wants to know how much they have, they'll be able to see what they did, how each department did for the year. And then I have the statement of...
Keep going.
Oh.
Yeah.
Okay. Then statement of the offering. I think this is similar to the ones that you had. And I added here, you have the tithe, the offering, this is the combined, the amount remitted, and then the tithe, check number, and those stuff.
Okay.
But what I'm interested more is the trend. That's why I do analysis here, down here. How did it change? So that we'll be able to see how they are doing. So basically, I have this simple report for most of the churches, and most of my churches prefer to see something like this because that's how they understand some of the things on their side. Any more questions on the report? And then, okay, if I were to go to other stuff, it will show some names, so I'm not going to do that. Go ahead. Okay. So basically, this is a kind of report. So I'm going to, I'll give this to Kimos in Excel spreadsheet so that I'll be able to incorporate into the ones that I have.
Right.
And then we can keep the two,
Right.
you know, depending on what the church wants.
Right.
Then they can choose, they can have an option.
And we can just indicate, say, samples of other,
Yeah.
reports,
Yeah.
so, yeah.
Yeah,
Okay,
yeah, yeah. Okay.
very good.
So you guys are cool with this? Okay. Okay, then let me close out this. And let's go back to the. Okay, so this is the one. This is the standard one. So we are going to keep this, and then we are going to keep the other one
Right.
also, so that they will have options,
Right.
you know, to choose from. Okay. And then on my side, there's another one called Audit Communication Letter. That is also there, that I put there to show all the internal control issues that we found, all the areas that they need improvement is also there. Okay. So this is where you'll be able to put, this is the disclosure. Okay. So here, some of the churches may have, I have one church that has plant fund and operating fund. They have two funds like the church at the conference, they have that. So basically you just put them, once you put the, you fill out these forms, it's going to flow into the balance sheet. So this is the notes. This is where we set the footing, is to make sure that this balance matches what is in the face of the financial statement. So again, you do this as may be deemed applicable, because not all of them may be applicable. Some of them may not have investments in there. And then most of the churches do not, if it's cash basis, unrealized gain or loss, and appreciation value on decline, they may not have that. So again, we have this to be like a standard, so that whatever is applicable you use, whatever is not applicable you just delete them as you go on your account. And then if they have investment, this side is more of where did it go? Okay. This side is more of the fair market values. This is more of an accrual base of accounting for them to disclose whether it's level 1, level 2, and level 3 investments. And I think this may not be applicable to most of our churches, because most of our churches are going to be CDs,
Right.
you know, which are, so you might not need this. You might not need this. And then accounts receivable. Again, yeah, if they have receivable to a church member, you need to put them there. And then the allowance, I always encourage them to keep an allowance, to make a provision just in case some of the people that they owe the church may not be able to pay. And then accounts payable to the conference and other vendors if they have payroll and stuff like that. And then if they have those payable to Curve or other entities, you also have that. You may not have a need for the plant fund because your church may not have the plant fund aspect of it. And if they have a trust fund, you may also put it there. And most of the churches, it may not be a trust fund, it may be like an allocated funds, so you can change the name depending on the situation that you may have for your entity. So basically, this is the disclosure type. You know, and again, you can add or subtract if you have a need to add to what you may want to show, because the disclosure is just giving a fair picture of the church, so that people will have understanding of what's going on there.
Okay, when you go to Form U, which is the balance sheet checklist, and the income checklist, I believe.
From you, okay. Let's see.
U 1, 2, 3. Or not?
Here, this one?
Okay, go back to, no, go to Form U. Is it Form U?
This is from you. This is the,
Okay, hold on, maybe I'm thinking of the wrong thing, give me a second. Form, oh, maybe it is. Okay, where we just did the checklist?
checklist is the,
The balance sheet checklist. Form X?
let me see.
No. There was a balance sheet checklist that we went through.
Probably need to change it.
Yeah, let me see. Format.
Form X? No, it's Form Q1.
From Q1?
Yeah. All right, so Form Q1, 2, and 3.
Okay.
Are we doing those during or after we do the balance sheet and the?
Oh, you do this when you're ready to prepare the financial statement. Okay. So this is just to help you capture all the things that may be important for the church. Any more questions?
That was my question.
Okay, yeah. So again, we did this so that it will be in compliance with the review standards, and also to make it useful to the users, especially the church board and the pastors and the others there who may have a need to review the financial statements.